Check, quick sound check. Can everybody hear us loud and clear? What's up, Coach Paul? How we
I
doing?
can hear you loud and clear, Coach Jay. Happy CPI, not CPA. I'll be talking to my CPA later in the week.
Almost.
How we doing today?
Doing pretty good, man. Interesting trading day for sure. Market's making all-time highs and then pulling back. We got metals making all-time highs. I had a little bit of a recovery day, was down last night trying to buy gold a little too early. I was able to take a short in the equities that got me back above green on the day. So it turned out to be a pretty decent day. How was your day, Coach?
I lost well. I bought the NASDAQ off the 3-minute opening range. We did have breakout that failed. It cost me money. And other than that, I really didn't trade much.
Awesome stuff.
I waited for that. It looked good. I took my loss. I didn't push.
There you go. Welcome to At the Buzzer, everyone. Our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. I'm Coach Jay. Been a Topstep performance coach since June of 2023, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 23. I've been involved in the futures trading industry for 4 decades. I'm here to share some of my experience, some knowledge, and hopefully help you become a better trader.
Awesome stuff. Thank you for that, Coach Paul. You are all our chat, our audience. Thank you for joining us each and every day that you do. Let us know how you guys did today. Were you up on the day, down on the day? Anything that you learned from today? Anything that you learned in the past that you implemented today? I want to take a look at an S&P trade that I did take. I was down trying to buy gold a little bit too early, but we talked about framing out the CPI print and then seeing some opportunities from there. So we'll take a look. I probably short armed the trade a little, but we will talk about that one for sure. Took a $900 payout today from Al. Nice job. I want to set my daily loss limit as a stop loss. Okay, well, I'll get to that Brandon's question in just a little bit. We got Mo up 4K in a new XFA. Nice job. Nice start to that account. Lost well most of the day and came back with a nice Dow short, up 31 bucks. Good to hear. Maui man, I did not catch many of the micro NASDAQ moves today. It is a challenge to try to drive the show for fast markets. Shout out to Andre doing it. So I try not to trade too much while I'm driving. I did take a trade before the open, but I saw the price action. Ton of nice trades out there. Opportunity really on both sides for everyone. Bugs flat on the day. Nice job. Flat's always good. Flat, scratch. That's a winning day.
It's a good idea not to trade and drive.
Oh, yeah. It's a great idea. It's a great idea.
Or anything that distracts you. In all seriousness. And when you're distracted and you're trading, if you were just like distracted driving, it's not. Accidents happen.
Absolutely. Eliminate the opportunity for accidents. Let's take a look at the news for the day. We did have some data out, inflation data today. We got more inflation data out tomorrow. CPI came in a little bit cooler than expected, 2.6%. Forecast was 2.7%. Actually, that's core CPI. CPI year over year came in at 2.7. Forecast was 2.7. Core CPI month over month came in at 0.2%. Forecast was 0.3%. Those were our big numbers on the day. We did have new home sales coming at 0.737 million. Forecast was 0.715 million. That is a change month over month of negative 0.1%. Forecast was negative 10%, so better than expected. We had president speaking a ton about a couple of different things. And some more news in Nvidia, another Nvidia investment. Feels like they're just they're throwing out $1 billion, Coach Paul, like they're $5 bills.
Throw one my way.
Yeah, I got to figure out how to get one of those.
Yeah, it's only $1 billion.
Right. Only $1 billion. Anything you got on the news, Coach Paul?
Yeah, the something a little different that the U.S. federal budget balance was less than forecast. Kind of helped the interest rate futures. I found that interesting. There were also Canadian building permits down 13.1%, forecast at -5.5%. Now, that is concerning to me, whether it's Canada, US, some weakness in building permits, weakness in the construction industry, possibly. Does that set a trend? But that is a big miss. That came out with the CPI, but I believe that if there's weakness in building permits in Canada, it's probably going to start here.
Yeah.
And that's a big miss.
Uh,
So those two things off the major headlines perked my ears up.
So thank you for that, Coach Paul. We also did have a headline that came out in the middle of fast markets this morning. China restricts Nvidia chip purchases, caused some volatility temporarily in the markets. I don't know that that was a new headline. We'll talk about how that may have affected the markets, but we'll take a look at the quote board before we do that. 36 different markets we can trade with Topstep accounts, and today to the downside we had soybeans down 0.95%, platinum down 1.59%, and soybean meal, our biggest percentage mover to the downside, down 2.15%. To the upside, micro Bitcoin up 3.33%, micro Ethereum up 3.7%, and heating oil, our biggest percentage mover to the upside, up 3.82%. Let's talk about our big four. We had crude oil up 2.69%. We did get some headlines from the president canceling all meetings with Iranian officials until killing of the protesters stops, in the president's word. It says, keep protesting, help is on the way. Crude oil up 2.71%. The S&P down 0.22% after making a new all-time high. Gold up gold down 0.44%, and the Nasdaq down 0.18%. Not able to close above 26,000 again there in the Nasdaq. We had silver make a new all-time high as well, up 2.06%. And
Hi ho, silver away on its way to 300?
So that's what Matt Grubb is looking for in the chat. Silver to $300. $100 got to be the first stop, but it is very within the range of the week to hit $100 in silver by Friday. We will see what happens. We'll cover it here. Let's take a look at the S&P. I'm going to take the chart executions off for now. S&P on the daily. Coach Paul, what are we seeing here?
Onward and upward. Very tight day. Some decent volume, which we can expect out of CPI, but it's still a bullish chart. We're still hanging around all-time highs without a sell-off. Longer term, wasn't even a flush moon to this rally, so it looks very positive.
Yeah. Daily ATR is decreasing a little bit each day, 64 points right now, 63.5. Today's range about 59.5. Did make a new all-time high, 70.36.25. And let's take a look at the 30-minute chart. What is that white line? The 200 moving average on the 30-minute chart here. But we're going to take a look at the overnight session. So we had CPI come out this morning. A lot of times we'll say it, if we have big data that is coming out before the open, especially something like inflation data, it's a possibility that we don't see a big move in the overnight session. And I think last night was the same story. We did have a little bit of selling, but really not much of a range, kind of flattened out. Where the day is going to start with CPI. So should we just start there, Coach Paul? You want to talk about anything in the overnight?
There was nothing to talk about at the overnight, really.
So let's take a look at the CPI candle. Here's a 30-minute CPI candle. And if we look at this on a 30-minute, what did we get here? Almost. Didn't close below it. But almost a three-bar reversal pretty much. I guess this is a three-bar reversal. Almost a J trade where this was the highest volume 3-minute candle. Sorry, highest volume 30-minute candle. Let's take a look at the shorter time frame. We talked about doing this at the close yesterday. Remember, you guys, I asked, what is where was the last CPI and framing out that candle. I personally like to use a 3-minute to let the dust settle. Framing out the CPI candle and then going from there. Trades with Pete says, I love these market conditions. I'm up 16K. Nice job.
Well, yeah, congratulations.
Nice job. CFT, the J trade. Yeah, I mean, high volume, we get a close below and it's a reversal. But one of the things, and like I said, I was down last night trying to buy gold, and I don't know that I'll be honest, I probably traded P&L a little bit today, where I was down about $800, and I gave myself a daily loss limit that was, more than that, but was down coming into the morning, knew that I had to drive the segment coming into fast markets, and I knew that potentially the CPI candle was going to give me an opportunity to take a trade. So I'll put back on these executions really quick. But one of the things we talked about was framing out the news candle and then waiting for the dust to settle and taking the trade from there. Now, I'm looking at this like an opening range trade with extreme volatility that also has the potential for that volatility to die right away. The CPI print comes out an hour before the equities open. And unless it's like a blow off top number, what we normally see is some volatility and then that volume start to dissipate right afterwards, right? And you can see this volume pattern on the after the CPI print is just, a downtrending volume until the open. So what that means to me, Coach Paul, is that if there's no follow through above the high of this candle, that's opportunity to fade back inside of the candle because we get the knee jerk reaction and then go from there. So I took a short. This candle made the all-time high, 70.36 and a quarter. But if you attach a VWAP to it, VWAP never really tried to go with price. And when this 3-minute candle opened inside of that high, that told me where the risk was going to be. So I took a short 3-lot in the S&P from 70.35. If I'm ever going to trade the news, for me, that's the way I'm going to do it. I'm not going to try to guess where this candle goes because if I take a trade in this here, and this was an accidental execution, this first one here. But if I take a trade before this, maybe I'm right and I get 30 points, but maybe I'm wrong and there's 30 points against me. How do I limit my risk? So waiting for this 3-minute candle to close, and then that gives me an opportunity to sell against that high in this case, or if it was a candle to the downside, buying against the low, just expecting that momentum to kind of stop from there. Again, like I said, I traded P&L a little bit, got me back to green on the day, and I took the trade off from there. But really, what I would like to look for on this trade is at least 50%, right? At least 50% as a profit target because we see it happen so often, right? It's not going to happen all the time. Sometimes this VWAP is going to leave the range to the upside. But this one being so flat, there was a high probability of the market trading back to 50%. When you trade P&L, sometimes you don't let your trades play out. So I'm conscious of that one today. Great entry, probably overmanaged it just a little bit.
It's interesting. That volume of that candle was very large. Usually we can get big moves without big volume.
Right.
That was as big as the opening 3-minute candle, if not bigger.
Yeah, good point.
Very interesting.
It's actually bigger than the 3-minute open.
Yeah, correct me if I'm wrong, but usually it's not that big a volume.
Yeah,
you have a large range, but small volume.
You're right, Coach Paul. Usually, what it ends up being is about maybe 60% of the opening candle. It'll be the highest volume candle for the day to that point, but it's usually not more than the equity open. You're right. Damn, I just noticed that. Good eye, Coach Paul.
You've got me hooked on volume.
Good eye there. Yeah, that was a decent amount of volume in that CPI print. And you can see that kind of set the high for the day. Now, could I be like, oh, I sold the high of the S&P? I only took 4 points out of it. I got to be better at managing trades. So great entry. Could have had better execution, but we live to trade another day. But when we closed below that candle, and the close below happened right around, this is 10 a.m. Eastern time. where do you set your risk if you're going to say this is a J trade from here? Personally, for the news, I'd rather trade it this way. I'm going to show you guys the 1 minute and why I like using the 3 minute. Because sometimes on that 1 minute, the dust didn't settle yet. Right? You can see it on a 1 minute candle. We have high volume. That next 1 minute candle was decent volume as well, right? 7,800 contracts traded. And then it starts to slow down. We can see the range of this candle is showing us that that momentum died. And that's 1, 2, 3 candles. And that to me just shows up pretty clean on a 3 minute candle. And that's why
on that 1 minute candle, the VWAP never left the range.
It didn't. You're right.
3 minute VWAP never left. And on that high of volume, think about that. So go back to all the king's horses and all the king's men buying it, couldn't push it higher. I mean, they bought it and it stalled. What's interesting on that 3 minute or even on this 1 minute, when we broke the low of that candle, that's where the stop sat, and it collapsed.
Yeah.
So looking at that, that was more important than the open. And that's, like I said, it's different than we've seen in big numbers.
Absolutely. That is let's just go back, actually. Let's go back December 18th. Let's take a look at the 3 minute candle December 18th in the S&P. This one was 22,000 here. Yeah, Courtney, I overmanaged that trade for sure. 22,000, and look at it, right? 16,000 here.
Yeah.
16,000, and it was about little less than half of the opening candle. So that is significant there.
Yeah, I don't think there was buyers left.
No.
It appears to me. I mean, it's kind of a J trade. But there was a lot of time between that and the opening. But
you know what it is? Maybe it's because today's candle was that all-time high. Maybe some stops going off up there, because that did make the all-time high up there. Maybe that added to it, that volume. Either way, nice rejection up there. And then we get the equity open. Which kind of continue that flow to the downside. I think looking at 50% of the news candle, 70-20. Looking at the low of the news candle, 7,004. Some interesting potential targets there. We're going to go back out to the 30-minute chart. Potential target to the downside, Coach Paul, the 200 moving average. We didn't get there on the first test, but at this time, the NASDAQ was actually testing the 200 moving average a little bit better than the S&P.
Yeah, it was. And it was, to me, a sloppy, hard day. If you did well, good. It just doesn't fit the way I trade.
Yeah.
But we did get urgency, but it took some time.
It did. This is about 15 minutes.
15 minutes. That's about but to me, for urgency, it's like the first 5 bars.
Yeah.
It pushed it. But to me, that was, and I was long the NASDAQ. I didn't take this short. That would have been a great hedge. But think about it. So we get that big volume off the number.
Yep.
We get the New York Open. And what is it? It's selling. Can't take out that opening range.
Yep.
VWAP leaves the range, and it cascaded. It was, and what was it? How many candles in a row? I think it was in the NASDAQ. What Jack was saying?
Yeah.
Was 11?
He was looking at the 5 minute in the S&P, and I think it was 11 candles in a row. Yeah, here you go. 5 minute chart right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 candles in a row of selling. That is 50 minutes of selling off the open. And then shout out to Jack, who got long down here, 69.87. Right above that 200 moving average. It was a hell of a trade. It's a scary one, and we see it all in the chat all the time. Why is this guy buying here? It's heavy selling. Sometimes the scary trade is the best one. And really nice bounce from there. I think he took the trade off right around 7,005. So got more than a 2-to-1 because he was only risking. He got long 87s, and I think he was risking 84s. So pretty tight risk on this. At the time we took that, at the time Jack took that trade, there was an 800 lot that showed up on the bid in the S&P at 69.82, and that was the first. It didn't fill. That was the first big order on the bid that I've seen really all week. I guess it's only Tuesday, but
It's only Tuesday.
right. But it showed up right below the bid, 69.82. All that selling could not take out an 800 lot order, and we bounced. We turned around. Eventually, we did take out that low, but there you have it from there. Anything else you got on this part here, Coach Paul? I want to point out something here.
No, there was no. I have nothing to add.
I'm going to switch over to the NASDAQ really quick. We did get a headline out. We saw this come in during fast markets. China restricts Nvidia chip purchases from theinformation.com. That was this candle right here. And this is another one where whether that's a regurgitated headline, I think we've heard it a couple of times now that China is going to be restricting some Nvidia chips. It's actually the only place I've seen that headline print. And I don't want to make any assumptions, but there was a time where an Oracle headline came out similar, and I instantly was reminded of this. Last month, we saw an Oracle headline come out that said Oracle basically couldn't afford its data centers, and an hour later, Oracle comes out and says that's not true. Now, believe the source you want to believe, but if a new headline came out about China and Nvidia, I don't know that the market's reaction would be 1 minute of selling and then a reversal. I think if there was truly something behind that, we'd probably see more selling. That's my assumption about what the market's response is going to be. I don't know what the market's response is going to be, but how heavily weighted Nvidia is in the NASDAQ and how big of a customer China is, I think we'd see more of a market reaction than that. So anytime you're seeing any headlines, I would encourage you, like my high school teachers used to do anytime we wrote a paper, to cite your sources. And, you get to choose what source you believe information from or not. But what the market showed me was that it shook off that headline, and we had a really nice rally from that point, and didn't set the low, but another potential high volume reversal here, right? We get a ton of volume in a 1 minute candle, 4,300 contracts trade in a minute because all the algos are going to jump onto that. As soon as we close above that high, it's like no one ever cared. So I think having a technical approach to fundamentally driven markets, headline driven markets, can really matter, because we got another headline later in the day, and this one actually held. Sometimes high volume means continuation. Go ahead, Coach Paul. You're going to say something.
No, and this one that kind of reminds me of buy the rumor, sell the fact.
Yeah.
The rumor, or in this case, there was a rumor from, I don't know, a source.
A source, right.
I don't, reputable or not. This has happened before. And so that's the rumor. And then we see, like you just said, high volume. That's probably 4 times the average volume right there.
Right.
This is almost, it's just the same thing as a J trade. Just probably algos selling a headline, and then they got to buy it back.
Right.
And we have that rip going up. So, and even on that, it was a great J trade in the short term.
Yeah. What it does do is give us volatility for sure.
What was the news on the second spike?
So at this time, the U.S. could take action on Greenland in weeks or months. From USA Today, that was this spike right here. And this one held. That one held. This one didn't. So reading I think the one thing that as a trader we should take, and this is why you hear Coach Paul and I all the time, whatever the source is, right? The market's response to a headline to me matters way more than anything, right? Because whether I believe the source or not, the markets are going to respond in a certain way. And the one thing it does is give us volatility, right? Similar to the same structure of trading the news candle. Here's another potential event. So this, to me, this is giving us, if you didn't catch the opening range trade, this is a second really clean trade opportunity in the middle of the day, and a third one because we get high volume. And now that the market is going to respond to that high volume from there. In this case, if we attach a VWAP to here, we got urgency. Here's an urgency trade. Here's a free one for you. Market just gave us a freebie, right? Maybe I wasn't expecting this. We get high volume. The first thing I'm going to do is attach a VWAP to. I'm going to frame out the range and attach VWAP to it because that might have just been a giveaway in the markets. Same thing here. Attach a VWAP to the high volume. This is an anomaly, right? This 1 minute candle, and I'm on a 1 minute here just so we could, for it kind of, we can see exactly when that volume came in. This 1 minute candle right here on that Greenland headline was 5,000 contracts traded in a minute when the average was 1,100. So almost 5 times the average. We'll report on the headlines on TopstepTV, but I think as a trader, what I do, anytime I hear it, if I'm watching TopstepTV and I hear Andre, call out a headline, from a logistical perspective, what I'm doing as a trader is saying, okay, on the shortest time frame, where did that volume come in? I could do it on a 1 or a 3 minute, attach a VWAP to it, and now I have a trade opportunity, right? When you hear, hey, there's a tape bomb, 2,000 lot just hit the S&P bid, it's going to show up in the volume, frame out that volume, and then have a trade opportunity from there, right? A lot of times I think what happens is we hear a headline and then we spend the next 10 minutes trying to figure out whether or not it's a valid headline or not, how the markets are going to respond when the markets are responding in real time, right? Whatever the algo is or the person trading big money, they're waiting about 10 seconds to decipher whether or not they're going to trade this. If we wait 10 minutes trying to figure it out, we get like stunned by getting hit by the headline punch and then not getting back into the markets, we could miss the opportunity. So for me, that's a way to quickly assess how the market is going to respond, because ultimately that's what we get paid from. We don't get paid knowing the headlines. We get paid trading the market's response to them.
That's a great point. When I was working with Peter Stottlemyre, he pushed that idea that on the what he called the information ladder,
Yeah.
news headlines are at the bottom. So making a quick decision on a headline.
Yeah.
Just with that information, it's fragmented.
Right.
And what you were just showing is there's the headline. All right, that's on the ladder, low on the ladder. Okay, next is volume and price action. There, volume, 4 to 5 times the average volume in this case, and the action, we closed above that. So just the headline alone, like you just described, leaves you with what?
Uncertainty.
Uncertainty. And it's always going to be there.
Yep.
But making decisions just based on a headline leaves complete uncertainty. You're prone. This is a great example of that. This is off the 1 minute.
Yeah, this is a 1 minute. We can switch it to a 3. Those ranges are going to be the same, but there you go. Here's the 3 minute. We got some urgency as well on that Nvidia news, and then this looks very similar to me to that to the CPI candle, right? You have big spike of volume, can't trade above the high. We trade right back into it. Same thing happens here. Big spike of volume, let the dust settle, right? Let the dust settle, but then from there, VWAP's a flat line. I know where my risk is if we make a new high up here. Fading back into this candle. And again, we're doing this in hindsight, but these things happen in real time almost every day. So if you can see price action after that volume trades, there is a way to trade it. That's my mindset. But I have to have an approach. And to me, the approach isn't decipher the headline and then take a trade from there because I think this should happen. By the time I'm thinking something should happen, what's actually happening is happening. So paying attention to that. And like Heather says, every day, Heather, we appreciate you being here. Hit the like button, people. Hit that thumbs up button if you haven't done so already. Nice two-sided trade opportunity in the NASDAQ today. It really still hasn't gone anywhere on a higher time frame. when are we getting a daily candle close above 26? Are we gonna have to wait till rollover to get a candle close above 26,000? I don't know what's going on here.
Well, remember tomorrow is PPI also.
Right.
So I think that the combined actions of both will give some direction for institutions. But all in all, this is not a bearish chart.
No, not at all. Just need some encouragement.
Remember, tomorrow's PPI could very much have the same type of action. Be prepared. Our advice is always to let the news come out. We just went through that, and then get more information to make a better decision. Which doesn't mean you can't lose money.
Oh yeah, no.
But at least you will have controlled and better decision making.
For sure.
You'll have a better chance.
For sure. Let's take a quick look at the Dow. Made a new all-time high today and then sold off. I think it did it on the news as well. Let's take a look at that. Yep, you go. Same thing here in the Dow. And this is not always going to look this way, right? On PPI tomorrow, we could get candle closes outside of this range and volume just go with it. But here's another one where let that dust settle. That's the high. And then
it didn't make a new high, did it?
No, it didn't. No, it didn't. That 3-minute candle opened inside that range. 49,900 is that price. 49,901 is the new all-time high in the Dow. And the next candle opened at 49,900 and we did not trade higher. 49,899 actually. What is the market's response to big fat round numbers? In this case, no buyers up there. All right, let's take a look at the Russell. Very similar story. But the Russell was a big chop fest after the open. It was a mess. And Coach Paul, we've been saying we like the Russell so much, but I hate the Russell when it looks like this.
Well, let's just look at that. If you wanted to buy it, that type of candle right there, it tells the story that Russell is going to most likely going to be choppy.
Oh yeah.
I think VWAP held that, never left that.
Oh yeah, I don't think it could have.
So with that information, that a huge candle with big volume, was that the biggest volume of the day?
Outside of the close, yes.
Outside of the close. And same thing with the S&P. So they were waiting for this news. It was like they were primed to prop this up.
That's an all-time high there as well.
Yeah, just like the Dow. Those two are like identical twins. But
we talked about this, Coach Paul. I'm going to go back in time a little bit here.
To the beginning of time?
Nah, not that far. But there was a July 17th, I'm pretty sure, 2024 was a CPI day that made all-time highs in the NASDAQ. And then we sold off pretty hard from there. And I don't think we made another all-time high for about 6 months after that, or 3 months or something like that. So today's action kind of reminds me of that just a little bit. We'll see. But equities making all-time highs on the news and then selling off from there. Just pretty interesting day across the board.
Now, we have a question from Chauncey.
Yeah.
This tariff Supreme Court news, what do you expect the impact to be? T-letter word?
The T word, yeah, the tariff word. The Supreme Court is tentatively supposed to give us their opinion on tariffs tomorrow.
Wow, yeah.
So, I mean, we were supposed to get it last Friday, right? We were supposed to get it last Friday. They changed the date to today. To tomorrow. So my first thought is, do we actually even get it? And then two, I will just have to see. I don't know that I can have an opinion because I don't know what they're going to say. I could imagine if they say that tariffs are unconstitutional, shit's going to get crazy. That's probably the best I could put that. What would you say, Coach Paul?
I would say this, I don't, be aware that's coming out. We don't have a time of release. Then we have PPI. There's a lot of big factors coming in that are, as I say, random. It's going to be hard to control, especially that Supreme Court news. They just release it after coffee or maybe after the when to really release it, and that can. Thanks for bringing that up. That can, like you said, it hit the fan.
Continental breakfast and then a opinion on tariffs.
Here's two things. I'm not going to trade until that news comes out. Thanks for bringing that up.
Yeah.
I'm just not.
Yeah, great point.
Then we just went through a long and hopefully learning process of trading news candles. Bring it down to a 1 minute and wait.
Yeah, 1 minute, 3 minute, 5 minute, and see from there. Coin Flip Capital, quoting JD there. Yeah, I mean, we'll be on air tomorrow talking about it. Again, the first point for me is, do we actually even get the decision? It says tentatively 10 a.m. Eastern time. Chauncey, I saw you say, I'm nervous to trade tomorrow. Best thing, probably our best strength as day traders is that we have the ability to decide when we interact with the markets. You don't have to do anything. And you might see some people make a ton of money if there's volatility in that. You might see people lose a ton of money. But I think if you feel that nervousness right now, that means you're not comfortable with trading it, and that's okay. There are times where I probably wish I listened to myself say, hey, you don't feel comfortable trading this. There aren't many times where I've told myself that and I traded and it worked out in my favor. Usually always losing days. Anything else you got on that, Coach Paul?
No, but I would, again, thanks for throwing that out there. That's a curveball.
Yep. And again, we were supposed to get it last Friday, which was the 9th, right? And so we were supposed to get it last Friday at 10 a.m. Eastern time. That's here. We saw the market sell off just a little bit. And, Jack was commenting on this. He's like, it's very weird, right? It's not like we got a decision and the markets just rallied and made all-time highs, right? All they did was postpone the decision. The market said, okay, well, we're good for another week. We continue buying. So we will see. That is we say it all the time. We deal with uncertainty in the markets, and a tentative decision is uncertain for sure. So we'll just wait and see. Just be aware. We'll talk about it on the air tomorrow as we come to the top of the hour there, that potentially we'll be getting a Supreme Court decision. Let's take a look, Coach Paul, at gold. Gold on a daily. What are we seeing here? Another one. Made all-time highs today.
And sold off.
Yep.
In a small range.
Mm-hmm.
What was the range? I mean, tiny range. At all-time highs. And still, when do we hit 5,000? But yeah, that's a very bullish looking chart to me. We're settling, and we settled above the all-time high yesterday. We held it and just flopped around on average volume. So that's hardly a top sign. So looking for a place to buy.
$67 range, high to low today. Daily ATR in gold is $87, $88. So contracted range today for sure. We did see that all-time high. Take a look at last night's action and another one where, if I'm looking at it now, did I need to take the losses I took yesterday or last night in gold if I just respected the fact that CPI was coming out this morning? We said it. It has the potential to be a choppy overnight session, and that's not always going to happen. But if I go with that as the potential and then see it actually playing out, there shouldn't have been a gold trade that I took last night. And if I look at this chart in hindsight, in review, there wasn't a real good gold trade to take unless I was range trading, right? Flat VWAP means range bound trade. Day before big economic data means range bound trade. So I should have been trading it that way. I actually did take a long. So I was long. I took a couple of longs. Now that I'm remembering what my trading day looked like.
And by the way, I'm not laughing at it. This is why we review
100%.
because our gut, someone was talking about a gut says this is going to rally.
Yeah.
But in a plan, if you have a plan, and you were just saying in retrospect, like what was I thinking? Was there an edge in that?
Yeah.
And when you review your trades, it's good to do that. Like, wow, because we have, our conscious mind and our unconscious mind can be at odds. And I've caught myself in that when I started journaling. I still am victim to it every now and again, but a lot less than I used to be.
Yep. Yeah. Definitely have to journal. I see the executions now, pulled them up on another screen. I got long. So I got long twice last night. First from 45, 97, 20. I took that off for a loss right around the low of this range. And then right as Dakota and I were getting off of slow markets last night, I got back in long 45, 97, 30. Actually almost the same price, but the market had already tested the low of the range and I was trading back up through the range. So, decent job getting back in. But again, am I forcing trades? I would consider this, Coach Paul, if I'm reviewing, I would consider these marginal trades. My trades that pay me the best are trending momentum trades. And in this case, it worked out, but I don't know that I want to take that trade again because it doesn't have to work out, right? None of our trades have to work out. But if I'm trying to put the odds in my favor, I have to stay away from trades like this, especially where that trade entry was right at VWAP in a range bound market. That was a coin flip trade at best. For my trading strategy, again, if you're a range bound trader and you identify this, at a minimum, if I was long from 86, then I'm happy. I did my job here. The markets told me range, and that was an extreme. But entering in the middle of this range here, again, that trade worked out, but I'm putting that in the don't do that again folder because it was a 50-50.
All right.
But big choppy day.
And it looked rally. It's interesting. They made an all-time high.
It did.
It seemed the theme today. It was like, I think it's in front of PPI. They're not convinced. They need more information, whatever, or they're liquidating or taking profit.
Yeah. Interesting one here, where here's that CPI candle. Little bit of a different story than the equities. If you just look at the angle of that VWAP, and it's hard to tell, right? You're watching this develop in real time. Is that VWAP actually trying to leave the range or is it not, right? Could you have taken this short? Maybe, where you say VWAP's still in the middle of that range. Maybe you take it, but in this case, it didn't hold, right? And we saw that selling come back in. Tough day looking at gold here. Silver made new all-time highs as well. I think silver might have been a little bit cleaner.
Yeah, it was.
Here's last night's open in silver. Here's the Asia session open in silver. One we really care about. That's at the low for the day. That's a different trade there. That's a different trade. That's nice there. Made new all-time. Yeah, go ahead, Coach.
When it made all-time highs, look at the volume on that half hour. All right, that was the biggest volume of the day until the close. But that is buying exhaustion. Largest volume at all-time highs. And it was stubborn. That's like no one wants to get short.
It didn't want to turn. It
was forced.
Yeah.
And then even then, I mean, for that risk,
Yeah, I was just gonna say that with a big contract, that is, I can measure it for you. Second here. What time was that?
I think it was around 11 o'clock Central.
Yeah, it's 10 a.m. All right, so here we go. On that candle, let's say we got short right at this candle close here on a big contract in silver. If you're risking new highs, that is 7,000 US dollars with one big contract in silver. And we've been saying, don't trade the bigs, trade the smaller contract. With the micro, divide that by 5. That is $1,400 worth of risk. And you
With
did
a micro.
you did get a 2-to-1. It did play out. But again, let's say you took it based on the structure wise, it's fine. But if you're not comfortable risking at least $1,000 with a micro silver trade, I don't know that it's worth it to trade it personally. But
Well, I will do. We just one thing's to look at. We saw that it because I saw this earlier, and I'm like, ooh, I want to sell it.
yeah,
I just did what we just did. And I'm like,
I don't like it that much.
I want to sell it. I can't afford the risk.
Right.
Now, once we get that 30-minute, because we're at all-time highs, go to a shorter 1 minute or 3 minute.
Yeah. So here's a 3-minute, and here's that highest volume. It started here. So you get this candle close below. So
Yeah.
I like this idea, Coach Paul. It reduces the risk because our trade entry is in a better spot here. What it doesn't reduce is the time that this thing took to actually turn around.
Yeah.
But yeah, now this risk here, where are we short now? 88,530 makes that a $3,500 risk, $700 with a micro, which makes it a little bit more digestible. Still not the big contract, but the micro made it.
700 on the 3 minute.
Need half lot guys in silver. You can't trade partials in the futures. Yeah, we can't do that, Bobby. I don't know. I hear you, but I don't even know who to ask who could get. The CME did say today that they are going to put out a 100-ounce silver contract February 9th, 2026. Yeah. But, to trade partials, there's a lot that has to happen. I could ask, but see if they listen to me.
Oh, I would. That is a partial.
That is a partial. Right, exactly.
Oh, it's coming. And it's none too soon. I'll give you a story. When I first started, I started at the Mid-America Commodity Exchange in 1980 when silver was at a crazy price of $50. It took off from like $5. But no one could trade the COMEX. The COMEX at the time was, the Board of Trade had a silver that was 7,000 ounces. The COMEX had the 5,000, and the Mid-America Commodity Exchange, where I was at, had 1,000. And the volume and the opportunity at the Mid-Am at that time exploded. Much for the same reason we're talking. No one, most people could not afford to trade it. First of all, margin. Day traders, we don't worry about margin. But the public, if you want to put on a position, it's $30,000 on a one lot. So yeah, it's about, I'd say it's about time. In 100, so that'd be 1/10. That's affordable.
Yeah,
So
100%.
my hat's off to the Merc for getting that done. February 9th, did you say?
Yeah, February 9th. We'll see. I saw somebody say hopefully we'll be able to trade it with Topstep. It's a little bit of a process there. I think we probably want to monitor how much volume actually trades in that product and things like that before it's available here. But it's a step in the right direction of a market that looks like it's not going to stop anytime soon. We got a question here from Billy. Probably stupid question. They are only cash settled. Are all of these contracts backed by physical silver? These are not cash settled, are they, Coach Paul?
The big one isn't. No.
Yeah. Yeah.
It's 5,000 ounces on a big contract, 1,000. It's not cash settled.
Yep.
Now, not to be confused, in 1980, that market was the Hunt brothers were trying to corner the silver market. But they made a big mistake. They leveraged it with futures. I'm not going to go into why it's stupid to try and corner a market. I'll save that for another time.
Okay.
I've done extensive study on it.
Yeah. Doesn't
I
work.
want to just tell you this. If you own all the silver in the world, for you to take profit, what's going to happen?
Got to sell it to somebody. Right.
If you've taken out all the sellers, you own it all.
Yeah. Who are you selling to?
As soon as you go to sell it, there's going to be anyone there. It's going to crash. And I've done the study. It happens time and time again. Now, in this situation today, in today's world, the cash has driven this. That's a little different. That's why you can't force them out, because the government, they own it. But even then, let's say that crazy price of 300. Okay, now at one time you're going to have to sell some of it.
Yeah.
Because if you stop buying it, and there will come a point. It's physics. Or just a tiny bit of selling is going to send a spiral, and that's what happened in 1980. Because the Hunt brothers did it with silver, and it's backed by silver, but the Board of Trade and the COMEX declared a market emergency. And then they said it's liquidation only. Now, you can't do that here if the Chinese own that much silver in the cash. But even then, you can have control for so long. At one point, you're going to want to start selling it. The complete opposite out of that was when the British sold their store of gold at $320 an ounce. And it was 2,000. $320 an ounce. So that's an extreme and it's almost like a J trade. But cornering a market at one point, and I'm not saying we're there yet, you have to take profit.
Right. Yeah. It's like all the what happens when you see with the crypto meme coins. Right.
Yeah.
I own all of the balance, right? I float this, pump it up on my social media, and then the valuation runs from $1 million to 100 million, and I try to get out. Like, wait, why is that guy selling all of the inventory? Everybody run, and it goes right back to zero.
I know a guy who this was his specialty, was to turn shit coins into bitcoins. That was his.
Yeah,
he did that arbitrage.
Yeah,
he did it for just that reason. His job, and he would get a 20% edge. So if he took $1 million of a shit coin, he had an edge. The guy would give him an edge because he couldn't. Just the way you're saying,
you can't get out.
You can't just get out of it. So he would portion it out, give up 20%.
Yeah.
And still, you think, oh, it's 20%. This guy was really a good trader. And he didn't always get out. It wasn't all. But he had a nice head start. But even then, he would just put a little bit out, and convert it into Bitcoin. And that's what they would do at that time when meme coins were hot. They'd call the ghost.
Yeah.
Get out of it, a little bit of it to a third party. But even then, that selling adds up. And who are you going to sell it to?
Are you going to sell it to? Let's take a look at crude oil here. Crude oil, interesting market with what is going on geopolitically. We hear the president talking about he wanted crude oil prices under $53. It's going the wrong way. Trading $61.10. We talked about this 200 moving average on the daily here, Coach Paul. I think we talked about it yesterday. Traded and closed above it. Crude oil, is it starting to be the year of crude? I don't know what at the buzzer episode that was, but towards the end of last year, it might have been the last episode of the year. I remember Coach Paul saying 2026 might be the year of crude. It's still range bound, but it is starting to get interesting for sure. Seeing a lot of movement here. What are you seeing here, Coach Paul?
Look at the velocity.
Yeah.
What I mean is high, the higher lows. It's definitely, we've had short covering. Now, remember, in the background, we had Saudi Arabia turning on the spigot. They're not going to do that forever.
Right.
And found it interesting. We had a J trade on a daily.
And this is when I'm pretty sure this is when everybody thought crude oil was just going to sell off to zero after the Venezuela stuff. Yeah.
What was that date?
This is January 7th. That happened over the weekend, though, right? So it wasn't then. That was going into the beginning of the
lows.
Year. Yeah.
Yeah. That was so. I mean, we're over the 200 now. So I'm looking for places to lean into a buy, a trend line. Well, we didn't save that trend line. That was a beautiful trend line.
Was it that one?
Yeah, but use the line chart.
Wait, did we go from this high or this high? Can't remember.
Use both. Yeah, we did both.
All right, go ahead, Coach Paul. Talk about this one real quick. I got a phone call. Give me 1 second.
All right. So, well, that's not the greatest trend. We've broken the other trend line. But if we use that high there and use that the second, there we go. At the 200. I just get it's the velocity of this rally. I mean, no one was talking. I mean, it was up to what, $2 at one point today.
Yeah. End of the day, up 2.7%.
Interesting. Now, you have fund covering here, and some funds looking to get long. This is very friendly. The way I look at it, you got a trend line, you have 200 moving average, you have velocity of short covering, and and when I say short covering, that could be just commercial buying, not even speculative buying.
Right.
That's short covering. So great action.
Really,
let's see what
nice action in crude. Off the open, it kind of just rallied all day. I do going here in just a minute, but do want to look at this. Let's look from the London Open. Moral of the story: trade crude in London.
Moral of the story: I agree. I don't even look at it until I wake up in the morning, and I'm like, I gotta get up earlier.
Yeah.
Cheerio. I'll start talking in my best.
Really nice push through the rest of the day. We had some headlines come out that caused some volatility in this market. The Iranian headlines, but not really shaking the markets. Kind of what we talked about before, framing out the news candles, seeing your opportunity from there. This was an initial push to the upside. Volume didn't leave this range to the upside. Maybe you can take an opportunity to fade back into this. And then another one where we had moved to the downside. So crude is an interesting one for sure. Something I'm going to keep on my radar. Got 8 charts on my screens at all times. So crude, you earned your spot. You earned your spot. Right.
Last one, the other crude, natural gas.
All right. All right. Natural gas. What are you seeing here?
Oh, let's look at 7 o'clock.
Central time?
Central Time. We've noticed that is the opening.
Yep.
We had a rally from the overnight.
I'm gonna go down to a shorter time frame since this is a open that we're looking at. There it is. That's a nice trade from that point.
We priced out. We didn't volume out once the VWAP left that range.
Yeah.
It was a nice trade. Now, from last night's opening, I don't really look at it in Asia. Natural gas, it can, don't get me wrong, but as a rule, it's random.
Yeah. I wouldn't look at this in the overnight. Maybe London. Maybe London, but definitely the New York session open is where that volume starts to pick up. Yeah.
And even the official opening, it's from another era. There is no pit.
Right.
It's really when volume comes in. And we've been noticing volume starts to really come in at 7 Central.
For sure. Nice trade there in natural gas. Quietly, still a really nice trade. Wonder who's trading natural gas out there, because that is it's probably not going to be as affected by some of the headlines that we're seeing, especially like tech headlines and things like that. But really nice trade there in natural gas. All right, Coach Paul, we are at time here. We got Coach Hoop doing a class in Discord coming up at 6 p.m. Eastern time. Then after that, Coach Rand, Coach Vince, 7 p.m. and 8 p.m. Eastern. Coach Dakota with slow markets tonight. Barron's going to be joining him 8:30. Got Aaron with the London trade, 2:30 a.m. Eastern, and D with the Euro trade, 4:30 a.m. Eastern time. Coach Paul, anything you want to say before we get out of here?
Yeah, once again, plan your trade your plan. Remember, tomorrow, PPI and a random announcement of tariffs by the Supreme Court. Be aware of that. All right.
Oh, Brandon had a question. I want to set my daily loss limit as a stop loss. I can't move, starting at $50, adjusting with ATR. If hit, it liquidates the trade. Then I manually increase the limit to allow more risk until I reach my daily max. Does this reinforce bad habits, or is it a reasonable approach? You want to set your daily loss limit as a stop loss. I can't move, starting at $50, adjusting with ATR. If hit, it liquidates the trade. Then I manually increase to allow more risk until I reach my daily max. Well, what is your daily max going to be? It's my question, Brandon. And I do think that probably, to me, that sounds like it'll just reinforce moving the stop. If I'm imagining what you're saying, let's say you're giving yourself a $500 daily loss limit, but you're setting it at $50, it liquidates you, and then you go back in and change it again, go back in and change it again. The only thing I think that's reinforcing is going back in and changing your stop after it gets hit. Personally, if I think about that, just initial thought, it sounds like it encourages going back and changing your stop. So you could, set a loss limit in the settings here that's, $50 per risk on the bracket and do it that way. But I would set a daily loss limit of whatever you're comfortable with, set it to liquidate and block, and then lock yourself out, and then set your risk per trade here at $50 if that's what you want to do. It would still be risking the same amount, $50. So you're risking $50 on a day, but you're going to go in and change it every time you hit $50. Go ahead, Coach Paul.
Okay, my initial opinion was that this is going to reinforce bad habits.
Yeah.
And thinking about it again is you're trying to avoid loss.
Yeah.
I would say,
which is a bad habit.
Use the ATR.
Yeah.
And then understand that and frame out your risk based on that. Because you could have series 50, then I'm going to do another 50.
Yeah. I would. I know what I would do.
I'm trying to eliminate losing trades. It sounds like, and I think also you're doing that you're looking for for good reasons.
Right.
You're not trusting your ability to take losses.
Yeah.
What the discipline, which will give you your destiny, is learn how to control the losses, not by force, but by good habits.
Yep.
So I applaud the idea. So obviously, it seems it's obvious you can't take losses.
Yeah, yeah, I agree, Coach Paul. You're trying to figure out a better way to manage your risk. Maybe because you're allowing yourself to go over that number. One of the things you could do, I did this yesterday. Like I said to you guys before, I'm not going to risk more than 8% of the account in a day. I set a personal daily loss limit, set to liquidate and block. I locked out the risk settings as soon as the markets opened last night. And choose what that number is and then trade within that. But yeah, don't try to avoid losses.
All right.
Right.
So and bring it up again.
Yeah.
Tomorrow.
Yeah, we'll spend some more time on that. But good question. Good session overall. If you haven't done so already.
One last thing.
Yeah, go ahead.
I just saw a headline in the Guardian.
Okay.
Not the information,
Yeah.
but U.S. citizens should leave Iran now, says U.S. State Department. That came out
good.
a few minutes ago.
Hmm.
So it came out at 11 after the hour. So just recently.
Go.
And crude closed over the 200-day moving average.
All right, we're a little over time now. I got to go meet up with my parents really quick, but I want to answer this question from Manfred because we just said it. What's up, Manfred? Why is avoiding losses a bad habit? Because they're inevitable. And the more you try to avoid losses, the more risk you'll end up taking when a loss happens, from my personal experience. If I've ever tried to avoid a loss, and Dakota actually just posted about this, right? He said he had his biggest losing day, almost, I think, ever. Lost $250,000 when he had a $5,000 winning day that turned red. And there's a huge point. There's a ton of road stops, pit stops that he could have made between $5,000 in the green and a $250,000 loss. But at some point, he threw the risk management out the window and said, I am not going to take a loss on the day. I was up $5,000. I'm not going to take a loss. And the market is big enough to take. I was actually just looking at a Wikipedia article of there's a Wikipedia article. This is a list that I never want to be on. Or maybe so but a list of trading losses. Bill Huang, the biggest loss on this list, $10 billion US. The market's big enough to take away any money that I have. So if I can't accept that I'm wrong on a day, it will take all of it. So I think why loss avoidance is an issue is because I don't know one person that has 100% hit rate strategy. And if I really convince myself that I'm not supposed to take a loss, I'm going to take a big fucking loss. So I want to try to avoid that. And it's happened to me more times than I like to admit. Go ahead, Coach Paul.
Yeah. Remember, it's cut your losses, let your winners ride.
Yep.
So they're going to have losses, and you have to be able to take losses without taking it as a hit on your ego. Think of it as business-like. Businesses have losses.
Yep.
Businesses that avoid losses don't last very long. That's what because they're going to happen. So, I want to quickly, and I've got to go too.
Yeah.
Is remember I was there? There was a trader on the Chicago Board of Trade, very successful trader, and he trained and other traders, and they became very successful in the bond pit. And I knew one of them, and he says our motto is "Love your losers." And the reason he did that was to take the ego away from losses. Yep. And you have to enjoy taking good losses. You could have a great trading day and be a losing day because you cut your losses.
Right.
and then we'll discuss tomorrow more. But you're thinking correctly. You just have to do a little more work.
Yeah. 100%. Good stuff.
All right.
Good session. A little overtime there. Hit that thumbs up button if you haven't done so already. Coach Paul, great stuff as always. We will see you all tomorrow. Have a great night. Trade well, manage your risk, and we will see you soon.
All right. Have a good night.